Welcome back. Our next guest sees a so-called wall of money looking to invest in real estate, and Canadian REITs are set to benefit. Joining us is Corrado Russo. He's Global Head of Securities at Timber Creek Asset Management. Thanks for joining us.
Thanks.
It was a good year for REITs in 2014 with the current low interest rate environment. What do you see ahead for REITs in 2015? Can they match the performance of 14?
I think they can. I think our base case assumption at this point is to see 8 to 10% returns for the global REIT market as well as the Canadian REIT market. I think we continue to see strong fund flows into the REIT space. We continue to see good growth. Our expectation for growth in earnings is in the 4% range, and we're getting about a 5 to 7% dividend yield depending on where you are in the global markets, and we continue to see that coming in. I think our base case expects that wall of money to slow down that pace going into the future, and we also expect some cap rate expansion. I think if we continue to see the same pace that we saw this year and rates continue to stay low, I think we can do better than that 8 to 10%.
That's an eye-catching phrase, wall of money. Where is that money coming from in terms of other asset classes, and what is driving it into the REITs?
I think it's coming from both institutions like pension funds and insurance companies as well as the retail investor. I think if you look at where it's coming from, a lot of it's coming from the fixed income space. I think a lot of people are looking at fixed income and saying, all right, how much lower can rates go? They need to go up at some point, and I know there's a formulaic impact on my fixed income portfolio if rates go up. So, I need to get out of that space, but if I go to general equities, I'm not going to get the income that I need to maintain my liabilities and my income stream. So I go to real estate because I'm getting a good income stream, a stable income stream that's transparent, and I do have the ability for that income stream to grow. So you're kind of getting the best of both worlds in between fixed income and equities, and I think there's a real desire for that from institutions and retail investors.
John?
So your earnings growth numbers in the 4% range, that's globally?
That's on a global basis.
And where would it be in Canada, kind of in the same ballpark?
In Canada, it's in the same ballpark, yeah. It's in the 3 to 4% range.
So broadly in line with nominal GDP?
That's right.
Okay.
Yeah.
What about Canadian REITs and their valuations? How do they stack up with peers internationally?
Yeah, it's interesting. They're actually looking quite attractive. We are a global REIT manager, and we've been relatively negative on the Canadian REIT market for the last 3 or 4 years, and that's been a function of stemming back from the financial crisis. They never went down as much as the rest of the world,
right.
And so they didn't have the same recovery both in valuations as well as growth. But if we look at the last couple of years, they have lagged the U.S. REIT market and a lot of the global markets generally. They're, given what's happened with oil prices and the Canadian dollar, they've had some recent declines over the last 6 months, and that's left them at about a 5% discount to what we feel is our net asset value. And historically, the last couple of years, they've been at premiums. So where the rest of the world was at discounts and they were at premiums, they've kind of flip-flopped, and now they're at discounts, and they've got some decent growth. Fundamentals are good. They've fixed their house, selling off some of their poorer assets and shoring up their balance sheet, so they're in a good position.
Are there some names of Canadian REITs that you like in particular at this point?
Yeah, there's several that have become buying opportunities stemming out of this oil crisis, but I think I'd like to maybe focus on a couple that I think are unique situations of what's happening right now. One of them being Invest, which is a hotel operator across Canada. Interesting for them is, if you look at what's happened with oil prices, and that's caused interest rates to go down, Bank of Canada lower interest rates, and that's obviously hurting our dollar. Well, Invest, a lot of their hotel operations come from leisure travel inbound from the U.S.,
right,
as well as conventional business, and with the currency being down, that's drawing demand, and we expect to draw demand from U.S. travelers here to Canada.
What names or brands is that REIT involved with?
Yeah, they're across the board, mid-scale brands typically, Hilton type brands. So they're mid-scale full service brands. And then the other name that's quite interesting as well is Dream Global. This is an interesting play on the Canadian REIT market because while you see some fundamentals in the Canadian REIT market that might get hurt by oil prices, Dream actually owns all of their assets over in Germany. And Germany is a very strong market now. Real estate fundamentals are very strong, and it's a market that has the widest spread between cap rates or going in income streams versus the cost of debt. So, you know, you're getting a huge spread there where you can buy properties at around a 6 to 6.5% cap rate and finance them at about a 2.5% cap rate.
And what type of real estate is that in Germany?
They're office and retail across the market. Historically, they've traded at a discount because most of their portfolio is driven by the Deutsche Post. That was about 85% of their portfolio a couple of years ago, and there's some expiries that were coming through on that. So that was causing it to be a share overhang on the stock. The company's done a really good job at acquiring other assets and shedding some of their Deutsche Post assets, so that's now down to about a third of their portfolio. But that discount, because of that share overhang, hasn't raised yet. There's still that sort of lingering view that they have exposure to the Deutsche Post lease structures.
Thanks a lot for coming in today.
Okay, thank you.
That's Corrado Russo. He's Global Head of Securities at Timber Creek Asset Management, talking to us about REITs here in Canada and around the world.